Monday, May 22nd, 2023, Monaco 64, home of alternative economics and contrarian views. So, central banks, Federal Reserve, Bank of England, yes, there's a lot of debate out there whether Andrew Bailey should be sacked, whether even Jay Powell as well should be sacked. There's a survey, I think, in the US that says that Americans have very little confidence in Jay Powell. They've been conducting this survey since '01. Yes, should the ECB exist? Should we reform the central banks? Well, today we're going to look at the bigger picture and why, in my opinion, central banks are nothing but glorified loan sharks to nations. Yes. Why glorified? Well, because they have these beautiful buildings, imposing buildings. They've got all the marble. They got central bankers wearing beautiful suits and, talking in a way that very few people understand. But basically, they're loan sharks. And I'm going to recommend you quite a few books today. And a lot of you will probably know about them because you've been following me for a long time. But for the new viewers out there, I think it will be very helpful for you to understand what's really going on in the world of money and banking. And I'm going to refer to one really interesting book that shows really that the purpose of central banks is to socialize the losses of the private bankers and privatize their profits. And who ends up paying for it? Well, we do, in the form of the national debt. So that's what we're going to look at today. And one thing I'd like to say, though, right off the bat, I'm not trying to blame any religion, race, ethnicity here, because central bankers, they come in all kinds of colors and religions. What I'm trying to expose here is the mechanism and the cozy relationship between central banks and governments. Well, that's the only way you can have a central bank, of course, is to make it a monopoly, and only government can give monopolies. Before we go further, just like to say that, everything is fine with Rudy. He's having some breakfast right now. He's doing really well. And so let's start with a few quotes here that will help you understand the institution of central banking. So here we have a former director of the Bank of England, Josiah Stamp. He was a sir. It doesn't really matter anyway. And he said this: banking was conceived in iniquity and was born in sin. The bankers own the earth. Take it away from them, but leave them the power to create money. And with the flick of the pen, they will create enough deposits to buy it back again. So there you go. That's what's been happening to those failed banks. And who's been involved in that? Well, the Fed, JP Morgan. JP Morgan, of course, is a big shareholder in the New York Fed. That's a different story. But anyway, another quote was by one of the founders of the Bank of England. And his name was William Patterson. And he said, "The bank hath benefit of interest on all monies which it creates out of nothing." So there are many people out there who still think central banks don't print money. Here you have William Patterson back in 1694, the guy who, one of the founders of the Bank of England, admitting it. And then you have a more controversial quote. And why controversial? Because over the last few years, I think people have been trying to say that he didn't say this. But be as it may, even if Thomas Jefferson didn't say this, I'm going to go through it because Forbes magazine covered it about 10 years ago. It says Thomas Jefferson warned the nation to beware the power of the banks. I believe that banking institutions are more dangerous to our liberties than standing armies, Jefferson wrote. If the American people ever allow private banks to control the issue of their currency, first by inflation and then by deflation, the banks and corporations that will grow up around these banks will deprive the people of all property until their children wake up homeless on the continent their fathers conquered. He says we should all mediate on that amazing prediction of things to come that are not necessarily beneficial to the 99%, but only to the 1%. So I'll stop at that with the quotes.
With rising inflation, bank failures, and massive layoffs across multiple sectors, the future of the economy remains uncertain. It's no wonder the central banks have been getting prepared by stockpiling gold. At ITM Trading, we have spent over 27 years building a team of seasoned researchers and analysts who can help you prepare for any financial crisis. Our experts are ready to provide you with proven strategies to safeguard your wealth and assets in the event of an economic downturn or currency reset, which is frankly inevitable. Don't wait until it's too late. Schedule your free gold and silver strategy call by clicking on the link in the description below.
Now I'm going to recommend a few books for you. I'm going to quickly go through them and tell you why I think it's important that if you want to learn about what's going on, that you read them. First one is a series of letters by William Cobbett, here an English MP back in the early 1800s. It's entitled Paper Against Gold, containing the history and mystery of the Bank of England, the funds, the debt, the lowering and the raising of the value of paper money. There you go, William Cobbett. And the main take from this book is that central banks allow the state, the government, in this case, the monarchy back in 1694, to finance their projects without being liable for all the debts, with the Bank of England and the cozy relationship between government and the banks. They're allowed to create the national debt. National debt was only 2 million back in 1694. It's been growing ever since. And who's lumbered with the national debt? Really, it is the public, through taxation, through inflation. And crises, of course, is a way to keep this going, because the powers that be scare the public into thinking that they have to support this. And yeah, that's why I always say focus on the monetary system. Try to not be distracted by all the crises that we're thrown every day of the week. So that's the first one. You can find that online, William Cobbett. There you go. The second one, of course, is one that will help you understand who's really behind the creation of the Federal Reserve. It's The Creature from Jekyll Island by G. Edward Griffin. Highly recommend it. The third one will help you understand what money really is, because we're not taught in schools as young children or teenagers about money, and this could be taught in any high school or even middle school. What has government done to our money? The Case for 100% Gold Dollar by Murray Rothbard. It will show you that we don't really need central banks, legal tender laws to function. And yet the fourth one was written in 1887 by John Reeves, and it's entitled The Rothschilds, the Financial Rulers of Nations. There you go. Rulers of nations, yes. As I said earlier, loan sharks to the nations, right? And why loan sharks if interest rates are about 5 or 6%? Well, because as William Patterson said, they can create these monies, as he says, or benefit, half benefit of interest on these monies created out of thin air. So even if they have just a pound or a dollar in the bank, they can lend out 10, sometimes even more, and they get interest on 10 instead of 1. And if you multiply by 10, it's up to loan sharking rates. And that's all about the fractional reserve system, right? So now, and I'm not trying to say the Rothschilds control all the central banks, but they were definitely in control of a lot of the government financing in the 19th century. And I think they were behind, partly behind the meeting at Jekyll Island. A lot of the bankers that met there were of European extraction, or actually were European. So now I'm going to actually refer to a book that was recommended by Jim Sinclair, who's actually part of the crowd, and he admits it, but he's trying to warn the public about the system. His original family name is Seligman, and he recommended this book many years ago. It's called Our Crowd, The Great Jewish Families of New York by Stephen Birmingham. And this book was written, in 1967, 68. And the author interviewed a lot of the descendants of these families that were also involved at Jekyll Island. So this is very interesting. But the interesting part for me is here on page, 37. And it's entitled Mount Beautiful. And it talks about a young August Schönberg. Schönberg, of course, means Mount Beautiful in German. It says, young August Schönberg cannot have been called casual or lucky in his choice of friends. He chose them with too much care, and not for their possible future helpfulness, but for their present and specific use. So this was a young man back in the early 1800s who was basically adopted by the Rothschilds to work for them. He was one of a distant cousins, I think it says. There is evidence that the Rothschilds were appalled by Schönberg and yet fascinated by him. He was to exert this double effect on people throughout his life, aversion and at the same time attraction. He could be rough-spoken and abrupt, and he could be sweetly charming. One thing quickly became apparent to the Rothschilds. He was a financial genius. His first duties were sweeping floors, but he was soon admitted to discussions in the partners' rooms. Yeah, there's speculation that he was really a Rothschild, but he was born out of wedlock or something. But anyway, yet as Schönberg's value grew, he became something of an embarrassment to the Frankfurt Rothschilds. He did not fit the aristocratic Rothschild image, and so still in his teens, he was transferred to Naples, where he became very Neapolitan and handled financial negotiations with the papal court. At the age of 21, he was reassigned to Havana, where the news of the New York Panic of 1837 reached him. A panic to Schönberg suggested a use for his money-making talents. He wound up his Havana business quickly and hurried to New York. arriving at the same time as Joseph Seligman, traveling, of course, first class with Rothschild money. He began buying up in a splendidly depressed market. So the other thing that happened, of course, he changed his name from Schönberg to Belmont, which is Mount Beautiful in French. It sounds more French, right? He didn't want to sound German. So the author says here on page 40, I've skipped forward a little bit, and this is the important part that goes to show you this mechanism of socializing losses, privatizing profits. It says, in the Panic of 1837, Belmont was able to perform a service which he would repeat in subsequent panics, and which helped make him a friend to bankers and to the United States government. By negotiating large loans from the Rothschilds, he was able to shore up the United States debtor banks. In other words, he was able, thanks to the hugeness of the Rothschild reservoir of capital, to start out in America operating his own Federal Reserve System. So there you go. And we skip forward to 1907. And the fact that J.P. Morgan, and many people don't know this, J.P. Morgan Bank did not start out in the United States, started out in London. And by 1907, with the Panic of '07, the private bankers thought to themselves, why don't we have the public finance ourselves? Why don't we start a central bank? And then they go and they meet at Jekyll Island. And yes, all crises are done for their benefit. And the solutions are brought by them as well. And they usually tell you that the solutions are there to help the public, but it couldn't be further from the truth. The solutions are there to help line their pockets and control of nations, really. And that's why I think they are loan sharks to nations. And it's a much better business than being a loan shark to small communities, because you get a lot of, you control nations. It's much more profitable. Yeah, and that's why the Rothschilds always dealt for kings, queens, princes, governments. And I would say that the too big to fail banks, they're part of this mechanism. And that's why they make them too big to fail. And people think, oh, I'm going to keep my money with them. But you're only facilitating this mechanism of, the loan sharks. Knowing your enemy and your enemy's strategy is the first step to winning the battle. And also, of course, knowing yourself is very important. So with that, let's quickly look at the markets this morning. It's 8:30 a.m. London time. Yes, there's a lot going on vis-a-vis the debt ceiling negotiations. Maybe now you understand why the best thing really for the debt ceiling would be that the US would default and all this debt would be basically written off. Yes, there would be a lot of chaos and mayhem, but maybe the central banks wouldn't survive because they depend on this debt, right? So anyway, right now, spot gold is trading at $19.75. It's down just over $2. The high's been 82, the low 71. Silver's down 11 cents, 23.74. High's been 23.93. Low's been 61. The Dow futures is down 56. Nasdaq is up 5. And the S&P 500 is down 5 as well. To the currencies, sterling is down 0.2 at 124.20. The euro is unchanged, 108.04. Dollar is unchanged versus the yen, 137.91. And the dollar is up slightly versus the yuan at 703.84. The Aussie dollar is down 0.25%, 66.33. The dollar is up 1/10 versus the Canadian dollar, 135.11. And the Kiwi dollar is unchanged at 62.68. To the general commodities, we got WTI crude down 0.75%, 71.20. Brent is trading at 75. That's down 0.75% as well. We've got platinum unchanged at 1,067, and we've got high-grade copper down just under 1% at 370.37. So let's quickly look at the bond market, and we'll start with the UK gilts. Right now, the 2-year yield is back below 4%, but it's just under 4%. It's at 397. The 10-year is up at 402. It's up 2.5 basis points. Look at the U.S. Treasury yields. The 10-year yield is down 4 basis points at 366. We've got the 2-year down 6 at 423. And the 1-month T-bill, that's up 15 basis points at 566. So with that, I'm going to wish you all a very good day. Take care. Bye.